Welcome, traders, to another Tick Mill trading update with me, Patrick Munnelly. Want to take a look at the headline US indexes as we head into a new trading week, identify some potential action areas, and see if we can identify some trading opportunities. So, starting with the emini S&P 500, if you're using the US 500, you can take off about 30 points to get the same levels as I'm quoting here in the futures contract for the US 500. Currently, it's spread of about 30 points. So we broke to new all-time highs, and as we start the week, we are trading at the 127 extension of the last leg to the downside in around the 48.80, 48.90. Now, as we hold above the 48.60, 48.55, I'm using that as my intraday bull bear zone. I'm looking for an extension up into the 4900, 4905. That's the expected range extension for today, given Friday's close. Be paying attention to price action there. There's an opportunity, I think, that we could see at least a pullback on an initial test into the 49.05 area. But my key target, my key upside objective is this 49.29 to 39 area. Now, that's the 161 extension of that last corrective phase. So I'm going to be paying close attention to price action if we can get into this area as an opportunity to play for a counter trend corrective move, which should see us pull back, certainly to think about a retest of Friday's highs from above. As we start out the week, as always, I want to identify a weekly bull bear zone, and that's going to be the prior cycle highs, this 48.44, 48.34. My lean is bullish against that area. So any pullbacks into that, if we don't find support on the intraday bull bear zone, that will be another area I'll be paying close attention to. Watching for bullish reversal patterns to engage on the long side with the same upside objectives. At this stage, we'd really need to see a close below that 48.30 area to suggest the potential for a more meaningful pullback, and 48.01 to 48.10 would be the target area I'd be watching for that pullback if we can take out the 34. But for now, focus is on the upside and upside objectives as we start the week. Moving to the Nasdaq. Nasdaq been leading the charge higher, and bull bears, intraday bull bear zone for me is going to be this 17,467, 17,409. As that area acts as support, we have upside objectives at 17,584 and the 17,670 to 17,706. That's also the weekly R1. I'll be watching for bearish reversal patterns here to at least play for a pullback. The weekly bull bear zone on the Nasdaq is going to be the 17,169, 17,127. It really needs to close below that bull bear zone to think about a deeper corrective move to target weekly projected range support coming in just below the 17,000 level. But again, from there, I'll be watching as for bullish reversal patterns to re-engage on the long side, as we still have upside objectives to target. We have monthly projected range resistance coming in at 17,779. But the initial play will be any pullbacks into the intraday bull bear zone with our upside objectives set. And then if we get bearish reversal patterns there, we can play for a counter trend pullback. Moving to the Dow Jones, using the YM futures contract here. The Dow is currently testing at prior cycle highs, 38,113. So I'm using an intraday bull bear zone at the 38,023 to 37,970. Pullbacks there, we look for support to target a test of 38,280, which is the 127 extension of this consolidation zone that we're currently in. If we can get through there, then we have the 161 extension and a 2 standard deviation away from Friday's close, which would have us up at the 38,500. Both those areas I want to pay attention to, because if we get bearish rejections there, I'd certainly think about counter trend shorts to retest the prior cycle resistance here at the 38,000 level before seeing if we can re-engage on the long side. As with the other indexes, it would really take a close below the weekly bull bear zone to suggest a more meaningful pullback. So that's 37,824 to this 37,840s as the primary support for the week ahead. As always, traders, plan the trade, trade the plan, and most importantly, manage your risk. Until next time, thanks very much.